Well, good morning and welcome to the pre-market rundown for TriggerCharts, Friday, July 29th, 2022. I hope everybody's enjoying their summertime vacation and this wonderful July. I mean, it's been a great July for not only investing, but for trading. We've seen quite the turnaround on a lot of the areas that have been very concerning, right? We saw things like oil come down a bit over the last couple of months. We've seen that commodities have turned down and that concern about exceptional inflation across the board may be starting to peak out. Although we did see the PCE numbers today hitting the highest level since I think 82, which is not a good thing. Anyway, I'm Andrew Horowitz. I'm the co-founder of TriggerCharts. I want to go through a couple of different things with you today before we start, and then, of course, have the opportunity to go over your particular names that you'd like to look at, whether it is a commodity futures, whether it's an ETF, a stock, whether it's a currency, or maybe a cryptocurrency. Before we do that, of course, please refer to the screen in front of you. We are talking about a lot of investments, of course, and ideas related to finances. And the point is, investing involves substantial risk. Past performance is not a guarantee of future results. Please consider this for educational uses only. A shout out to my friend David, who's on today as well. We have a pretty big group that is... That's David Z, by the way, if you didn't know. We have a pretty big group that is with us today, and as we do have each and every week, pretty popular morning discussion that we have. Now, excuse me, I want to mention something, and I want to point this out, and I want to draw attention to something really important. This big announcement coming next week. We've been talking about what's going on with TradeStation, but what it looks like here, I'll give you a sneak peek just for a second here. It looks like actually our tools we've redesigned to be utilized on multiple platforms now. Now, it's not going to be released until September, but you can start lining up and getting ready for this, and we're going to talk about that next week, some of the things, and then each and every week. You'll see some emails if you're on the mailing list of what's going to be happening. We'll give you a continuation of the process until TradeStation essentially shuts down their platform at the end of September. But the good news is this is going to be available for the most part. And when I say for the most part, some things that are underutilized we're not going to put out there, but there are some new indicators or enhanced indicators that we're also going to have. But the point is, just to be clear, the indicators that you know, that you love, that you want, that you have to have, the aileron, the altimeter, the autopilot, all of that is going to be available. So, and again, you could use it on, if you want to use it on TradeStation or possibly eSignal or Trade Ninja, all going to be available. But I'm not going to spoil it all. We're going to wait till next week for the big announcement. Okay, well, let's talk about themes. Oh, let me mention this. So I'm going to write here so it pops up. Pop me your questions about individual names that you'd like to look at, and we will do so. By the way, this is also recorded. You can get this on our YouTube channel or over on TriggerCharts.com. All right, what are the big themes that we're working on right now? The big themes that we're working on right now is from higher rates to maybe a dovish Fed, all in 1 week. I mean, we're looking at the concern about, wait a second here. Wait a minute. We have the potential for 75 basis point increase, 75 basis point increase, maybe 50, maybe another 75, maybe a 1% increase, and this is going to continue for how long? It doesn't look like it's ever going to stop. And now, all of a sudden, we start seeing some indications that the Fed is saying, we've reached some levels that we find to be pretty good. But what we're going to do right now is we're going to consider the economic indicators as they come in to provide us for what we're going to do moving forward, which you wonder why they didn't do that from the beginning, but okay. But it looks like, and why the market's ramped up on two things. The commentary from the Fed, right? It wasn't the actual 0.75% increase. It was the commentary, a couple of notes by Powell when he talked about how they were going to start thinking about looking at it, not just going in a straight line. So the linear thought of moving in one direction only in terms of rates, now off the table. But the second point was that he said, hey, you know what? We're going to start looking at how this is actually impacting the economy, what the numbers are, and then we'll make some decisions. So where are we? Well, we saw GDP hit at a negative 0.9, much lower than anticipated, much greater consolidation. Now, by most metrics, 2 quarters in a row of negative GDP is considered a recession until you get 2 quarters of negative GDP, and then they start screwing around what the actual definition of a recession is. And what we have right now is a situation where the government is doing what we call economic theater. As a matter of fact, that is the topic of this coming week's Disciplined Investor podcast. If you don't listen to that weekly, we talk about the things we talk about here, but a lot more detail. Economic theater is what is going on when Janet Yellen and President Biden and many of the Fed speakers saying, hey, you know what, we're not in a recession right now. No, not at all. We know better. Fact is, recessions don't have to be categorized to know when you're in it, because the fact is the official recognition of a recession, whether or not it's happening or not, happens months after you actually enter into recession. And once you come out of recession, it's months after anyway. Fact is, we need to think about more so as investors the backdrop, but more about what's happening with earnings. Earnings are the key issue, and earnings recession is much more important than looking at an economic recession. Now, sometimes they will go hand in hand. Economic recessions oftentimes will then bring on an earnings recession. Thereby, once you get into the mode, and what we saw with thinking about getting into an economic recession was there was a repricing. Multiples contracted substantially. When the multiples contracted, we saw that stocks started coming off. Those stocks that have very little opportunity for growth in the future, or maybe even growth in the future but no earnings, came down the most. Then we saw some of the other names, even the ones that had really good balance sheets, good earnings potential, start to come back as well. That is why what we saw in July when earnings came out, and we saw the banks weren't so bad, and a lot of the earnings negativity that surrounded them, the 28, 30, 35% reduction in earnings from a year ago, that primarily was due to the fact that they put on their books back and socked away money for bad loans. Essentially, they are making sure that in the event we do have a downturn in the economy, the loan loss provisions that they have are set aside. That was substantial because 1 year ago, they did the opposite. And that's where that differential came from. That's why banks actually did pretty well recently, because you got to look past that, take that out, subtract that, and look beyond it. And the question is, why are we seeing this bounce on, for example, a negative GDP print yesterday? Well, that's because, if in fact we go with the theory, the Fed's looking at the data and you have a negative GDP print, what happened is that they're going to say, we maybe have to take our foot off the gas. Unfortunately, what we saw right now was that today, turning that corner another way, and because the Fed is, in fact, involved in a very substantial amount of what is happening now concept. What is happening is that the PCE, the personal consumption expenditures rose 6.8%, the biggest 12-month move since the 6.9% in January 1982. And that index rose 1% in May, tying its biggest monthly gain since February 1981. That was released this morning. That's why what is happening now is this big drawback in overall in the futures right now, right? The futures were up. This was up 120 earlier. This is up 40. This is up 120. The Dow Jones, they're all flat to down. And after a few days of incredible rallying, look what's happening. Gold is holding up a little bit, even though the dollar, which is an important issue, right? This dollar index is a daily index of the dollar, up a little bit today, but off is high, down 3% or 2.5% at the low here, right? At 105 from about 109, about $4 at 109, 3.5%, 4%, give or take. That's an important feature of what is going on right now, and that's happening. July, we did see this big move up initially, and then this drawdown. That drawdown right there does help commodity prices and is sustaining some things like gold and silver, hard assets, et cetera. But it's also very beneficial for many companies, the big ones that are involved in multinationals, the sales across the pond. Bottom line of all this, what's going on? It's right here. That's the bottom line. Cut through the chase. Just let's get it out there. It's better than feared. There's some questions. Chat's disabled again. Hang on a second. Let's see here. I don't know. Why is the chat disabled? This is a new thing. I don't. Give me 1 second. Let me see here. I did this earlier. I don't know. Here. All right, try the chat now. Somebody try the chat for me, will you please? There you go. Oh boy, I don't know what's going on with it. Thanks, James, for letting me know about that. I don't know. It's a new feature, I guess, something. What's going on? I mean, you have to do it in the back end settings or something. I don't know. Anyway, where was I? Oh yeah. James asking about the trading view. He's also asking about beta test. Yeah, I mean, the testing is just send me a note to support at TriggerCharts.com. The first part, people that want to get on board with the new systems. It's gonna take a little while, but till we get it fully out there. But a few people could definitely give it a try. We'll do that. So support at TriggerCharts.com. All right, let's go beyond that. Oh, so again here, I have to remember to do that in the future. Here, put your stocks, symbols, etc. in that little chat that is now working, and make sure to let me know what you want to look at. All right, July 2022. Massive. When I say massive, I mean massive. Massive move for some names. Check this out for a second. Let's see if I can find this. Where's my rotation? Check this out. Let's just look at this column. See this column right here? Keep the holes of that column right there, okay? So here we got Q's up 10%, SPY up 7%, the Dow Jones Industrial Average up 5%. But you can see names. Look at all these crazy things. Let's sort this by. Let's see if we can find some crazy things here. I mean, these are all ETFs, etc. Dick's Sporting Goods up 23%. Netflix up 29%. Amazon, it's up 10% today, but month to date up 15%. Apple up 15%. The smaller names, like a Roblox, up 30% this month. Zoom's not going anywhere. Let's see if I'm just curious about Peloton. Up a little bit. Let's take that. But there are some incredible names, incredible moves on a variety of names. One that I've been talking about for a while, the Siga Tech, up 93%. I've been pointing that out to you every week for the last couple of months about monkeypox, and that this is going to be the potential, even though they only have a smallpox vaccine, it could be used in theory if this thing starts getting worse, and it's up dramatically. Over the last 3 months, 260% over the last 3 months. So pretty good. Not bad. But massive moves overall. Where am I? Here we go. I think the big thing about this month, and what I want to tell you, is that if you kept emotions out of the way and you found opportunities without that gremlin in your ear telling you that, oh, we're in a recession. Oh my God, it's just going down. We're going to hit new lows. The bottom is not in yet. How wrong were those people so far? I'm not talking about, 3 months from now, but so far. What did we know? What did we talk about? We knew that investor sentiment was in the toilet. We knew that earnings multiples overall contracted from like 20s down to like 17, 16. Unbelievable move in a few short months. We knew that the dollar was going up, and we knew that we had all these different headwinds. We knew that there was a repricing that was going to happen. And what analysts always do, it's just the way it goes. They're penguins. We know about that. They take the numbers down so far, or they take the numbers up so far that they have to adjust. And what they do is then they adjust lower, and then companies during bull markets will beat and do well. And during bear markets, what's going to happen now is they took it down so far that, again, much better than feared was the issue. One of the things you want to look at was basing patterns. Now, I pointed this out yesterday on Twitter. If you're not following me on Twitter, you really should do so. But take a look at Roku. If I can get the symbol right. There we go, Roku. Look at this basing pattern. Look at this basing pattern. This is a very wide but long. I'm talking about since late April. This company was 100 down to 77. Now, that's a big move, right? There's 20% top to bottom on that move, but it couldn't get above and it couldn't get below. And what I pointed out was this is a classic loaded spring. Now, everybody's like, oh, Horowitz, look at that. After earnings, even though he says a loaded spring looking to break out, and I said something like, if it's a loaded spring, Watch for Lotus Spring reaction after earnings. And everybody's like, wait, Lotus Spring is supposed to go up. No, 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 no. A Lotus Spring, it can go down or up. What I meant and what I'm telling you and what I thought I was clear about was that a Lotus Spring kind of consolidation like we're seeing right here, take a mental note of what you're looking at here, will eventually break out dramatically on some news, on some item, or some reason that we don't know of. Either direction, because the consolidation has been so tight for so long. Now, this I'd like to see it a little tighter, but again, since April, this consolidation has been pretty on. And when this thing breaks out, and breakout means down or up. It could be a breakdown, a break up. It's breaking somewhere, right? Breakout is break up, break down. So there's two types of breakout. Let's be clear. I'm going to say this again, so I'm very clear about this. A breakout can be a break up or a breakdown. So you have a Lotus Spring breakout opportunity here. And what happened? Earnings came out. It was god awful, down 20 bucks, down 23% today. This is a double top we see on the left here on the weekly side. Look at this nastiness. Now we're trading at, what's the level here? 65, right? So we're trading right about here. Goes back to 2019. Not only did the pandemic move not happen, but anything from 2019 and above did not happen. This is I don't know. This is AOL, I guess, of the streaming video world. Earnings. Here's another clue that things are happening here. Again, better than feared. I'm going to bring this up again. We had some poor reports. I mean, Amazon today, not a great report, right? However, if you strip out the point that they lost a few $1 billion on their Rivian, and if you look at the other side of it, where they actually did really well with their core businesses, and they said they're not seeing any consumer slowdown. Hey, you know what? No wonder it's up 10% pre-market. It was up 13% earlier. Apple again fell short a bit, but their iPhone sales and things and their outlook was pretty good. So there's something there. The banks, again, better than expected. Now, you have other things like Snap. Let's take a let's look at Snap. Just, there's nothing good to say about this, right? I mean, Snap was, before the earnings, 13, fell down to 9, not going anywhere. Look at this, just terrible. Absolutely terrible. Looks like Roku, doesn't it? To a lesser degree. This is weekly on the left-hand side here. Any of these can be used at any level. There's daily, there's weekly. You can quickly change the time frame. I don't care if it's 10-minute. You want to trade those levels, 60-minute, 30-minute. I always like the 30-minute from an intraday standpoint just to see where we're going. But you can use any time frame you want. We're just looking at longer-term trends here because some things are just truly amazing to look at. Let's be honest. So when we see some earnings breaking down, advertising issues are a problem. I want to share something with you also. Let's take a look at what's happening right now. Look at Walmart. Now, Walmart did snap back pretty well. Hit its line on the downside, went right through in the pre-market, right on the open, came right back up to its top line right here. I'd expect Walmart to roll over a little bit. I'll tell you something. That Target just seems to be running really nicely because Target's had some really, this is not Target. It didn't look like Target when I saw it. There we go. Target, same maneuver. Target, though, has a beautiful possibility of moving right back up to its high. Look at this. Great support where we see this on a weekly basis, that the unfair low and the high volume mark, if you will, or as we call it here, the cruise in the stall. But, when you look at the point of control, the high volume mark, a high volume mode, or the unfair low, looking at one more way to look at it, the resistance support, right? Resistance support. It's the same number. Very good support down here at 148. Currently trading at 159 right now. Up a little bit in the pre-market. But, the differential between Walmart that obviously had a big issue, this Target that had a big issue, and Amazon, look at this. Amazon did come down. There's no question about that. But it was in sympathy because Amazon right now, again, trading up at, 134, right about here, has plenty of room to get back to 149, in my opinion. That's just my opinion here. Let's just go back a little bit further. Yeah, 135 is this level, but there's nothing here. This is when all the time we remember this. We want to all the time do this, right? We're going to look left. We're going to look left. We're going to look left. We're going to look left all the time, from right to left. What's going on? This whole area is blank. There's nothing here. There's no resistance right here. There's no major volume in this whole range. Where does the next volume point come in? Right about here. Now, will it get there? Another story. But the fact is they had a much different conversation in their earnings call than did the other two companies that I mentioned there, the Walmart and the Target. Advertising revenue, big problem right now. That's why everybody's trying to switch from that. And the tech has really driven markets higher. I mean, look at, we're seeing it again today, right? This big reversal of the move from value to growth, growth to value. Right now we're seeing that value of the last week or so has done really well. We also saw the same thing happen. Now, this is really funny in my opinion. You know, crypto, okay. Massive reversals, why? Well, is it because all of a sudden we have inflation and crypto is a great inflation hedge? No. Is it because crypto is uncorrelated? No. What is it? The U.S. dollar is dropping. I mean, that's basically what it is, right? The U.S. dollar dropping is a big issue, and there's risk-on sentiment that went on in tech, and everybody's like, hey, let's get in. Look at some of the names. I mean, look at like Bitcoin Cash, and look at Ethereum Classic. What's Ethereum Classic? What ET? This is a pretty good thing to look at. Oh, I want to look at that in a second, too. Where am I going? Here. ETCH? No. ETHC? I always forget the symbol. Ugh. ETCH? No, I don't know. Anybody knows what the Ethereum Classic is? Please type it in there for me so I don't look like an idiot for much longer. But yeah, we did see that we forgot the hype about, forget about this whole thing about it's just a trading instrument. That's the fact. Economic information, employment, pretty much the same. Fed move, 75 basis points, now dovish. Mortgage reports, terrible. Housing reports, terrible. But all this bad is good. Let's take a look at some stocks. Somebody could find me. Please, somebody look up Ethereum Classic ETF. Do a Google on it and just hit me back on that, okay? All right, let's go to the top here. Where are we? Okay. All right, so this is pretty fascinating, isn't it? This is the 10-year yield. We're as high as about 3.5 right here. Disregard 34. Just put a point in between. That's how it's published here. We were close to 3.5, and this was on the 14th of June, rolling down dramatically, even with rate increases. Even with rate increase. ETCG. Yeah, let me see this here. ETCG. Yeah, look at this move. Look at this move. From 5 to 13. It's a matter of, I don't know, 1, 2, 3, 8 days? Crazy. It's up another 30% today. Really? No. Is that right? That was yesterday. No, it's today. That's today. Is that right? 13? That can't be right. Just a second. It closed at 13. This isn't right. It's down a little bit today. This is yesterday's move. That's where it moved yesterday. Up this amount. 30%. I don't know why that's showing it like that. Maybe it's because it's a delayed hard borrow thing. I guess. It only trades during yeah. This only trades during market hours. There's no trading right now. That's why. That solved that problem. Okay, so 10-year yield coming down dramatically. Crude rolling down a little bit, but coming up a little more right now. This has been really good for XLE. Somebody asked me about some of the names. I mean, XLE is up another 2% today. You look at XOM come out with earnings today, blew earnings away. You look at Occidental Petroleum. I mean, they're just all doing really well. Long basing pattern here, but with a couple of glitches on the upside, right? This area, use your box tool, use some other kind of tool right there. Long basing pattern above, below, but really can't get below this, 55 level. We know that Berkshire Hathaway is buying a ton of this stuff. XBI, this is the weekly S&P Biotech, or the S&P Biotech, really done very nicely. We had a couple of these for client portfolios, like an edit. Look at that move. I mean, from 10 to 17 from the bottom in June. My point is here, this is once again reinforcing the point of if you were watching, if you were looking, if you didn't have those gremlins in your ear thinking about what was going to be happening with regard to, oh my God, we're in a recession. Oh, put your masks on, social distance, or whatever's the proper response to do in a recession these days. The fact is that you would have opportunities. And we've been pointing these out. There's a lot of them out there. I mean, UNG, anybody trading natural gas? I mean, wow, we pointed this out at 1855, the basing pattern. Where is it now? $30. This was 1855 in the beginning of this month. Natural gas has gone up like 60% this month. Now, where are we now? Well, we got some resistance really to deal with at 28 and 30, and the support resistance right there. Resistance clearly above 29. I don't know where we go through here. I mean, I would think that there's going to be some problems with related to Ukraine and Russia. We can go through the whole political problem there. Yeah, this one really ramped up yesterday. This one, I took some off the table on this one yesterday. That was a parabolic move higher. See how we get these moves like this? See this move here? Looks very similar to this move here. So right here and right here, you get this breakout, and then you get a retracement. I would look for this to come. I have still some in the back, but now just trading on massive profits on that. EBS is another one I was talking about. This one's Emergent Bioscience, another slower moving, questionable, but yet related to the area of monkeypox. Apple came out with earnings today. I don't know. It was definitely, I think there's some overhead resistance right now, trading at 160. I would not think that if they reversed lower today, that I would be too surprised with Apple after this big run that it's had right here. I just wouldn't be surprised about that. Amazon trading at 134. Again, I told you about that before. Etsy picking up all of a sudden over the top. Look at this nice yellow candle. That's the alert, right? We look at the autopilot. We look at the colors. Doesn't matter anything else, right? So let's take this off right here. Just look at the colors. Simply be short here, or said another way, don't be long if it's red, okay? And if it turns on this direction, right? Right now we got this. Now where are we from here? Now that's when we have to turn on our studies. Now we turn on either the radar and we see where are we? Well, there's some overhead resistance at 115, bit of a hole in this area, right? We can see there's very little overhead resistance. Let's draw that box again, right? In this range right here. Oops, let's get that box in. That range is very little overhead resistance. We still have a little peak to get over. This definitely could move through if things do agree with it. And then we can do one more thing, of course, and we can put on our other study, which is our, not that one. I'll put that back, sorry. Altimeter, and take off our radar. Now we know, and then take a look. Where are we? Okay, what does it look like? Yep, that confirms out. Makes sense, it should. But we can see actually down and really bring this a little bit lower, say that's our range for a breakout into this. Now, do you want to play that up to 113 from 104? 9% gain, not too bad. Roku, well, we talked about that at death. This is something here. So we just signed a bill. It deals with, we're not sure if it's fully going through right now, I guess. Still, I think there's something going on until it gets signed. But the CHIPS bill, and it had some solar and EV credits and a bunch of other things in there. Solar companies really doing very well. They should with the higher cost of, of gas. And you got like Solar Edge looking pretty good. First Solar, they all look pretty much the same. Looking pretty good. This one is a Chinese. They make. This one is a company we own for clients. It's DQ. It's photovoltaic and a variety of chips and other kinds of items for the solar industry. Somebody's asking me about Datadog. Datadog, we have momentum on the downside. You got, it's got to do a lot. This is another one that was a high flyer for a while. High of, high of 200, we'll call it. Currently trading 50% lower from its high. You got a lot of resistance in here. I mean, 114 is the number I'd be looking at. That's when you want to get out. Okay, so just to recap all of this, the market's going to open in any second now. Futures come up all in the green right now, and probably trying to finish off the month in the green. I'd expect probably that August we have a rethink of some of this. Make sure to be here next week when we have that announcement. And, of course, attend or take a look at TriggerCharts.com. Watch your emails. We'll make sure that everything's there for you. Thanks so much for being here with me, and have a great weekend.